This one stock can change early buyers' lives. It's not financial advice, but financial advisors might say to buy as much as possible before November 26th. The company is Danaher, ticker symbol DHR. They do life sciences tools, diagnostics, and as money has flowed out of semiconductors, the Mag 7, and to some extent even oil companies in the last week, money's flowing into life sciences, pharmaceuticals as well, biotech. So the market is down, but the market is made up of 30 to 40% of big tech. So money is flowing somewhere. It's not just going to cash, and these life sciences companies are benefiting. Danaher, they are benefiting from an increase in at-home and affiliates using their tools to do testing. So you can test your blood at home and then send it in. You can go to an urgent care center. All of these places where life sciences tools are needed are becoming more attractive, more convenient. And this is a big company, 150 billion market cap. They have over $1 billion free cash flow. So that gives them some flexibility. If tools aren't doing perfectly well, they can funnel some of that money into AI diagnostics. AI applications are growing for life sciences, drug discovery, etc. So best places to always invest in are healthcare and education. And right now, it seems like healthcare is the place where the money is flowing, even as the economy looks shaky. So this is not really a rate cut sensitive company or sector. They're right up there with another big company, Thermo Fisher. And research is still needed for a lot of these big diseases, cancer, etc. That no matter who the administration is, these labs, these public companies need money from the government, from investors to buy these tools. And these tools are sold by Danaher. So it's the picks and shovels for healthcare. Let's jump into a little breakdown.
This is Sam Putnam.
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 All right, so this is a little bit about the inflows to the healthcare related ETFs right now. I mean, we can just see this on the chart for XBI. A health tech ETF HEAL is actually pretty specific. If we look at that one, it doesn't look great. But if we look generally at healthcare, PPH, pharmaceuticals are up, XLV looks crazy up. Biotechs are doing well as well, XBI, LABU. And then if we look at DHR, definitely up. I'm not even sure DHR is in that healthcare ETF that ChatGPT just pulled up, but Thermo Fisher as well, holding up really well. So it's not to say that these companies are going to double. They're slow moving. I mean, this moves 3% a day, but the most recent earnings was solid. And at a time when the other stocks in the stock market are selling off, I mean, name a stock it's not doing well. AMD is the first one that comes to mind. I do think that just because Nvidia sold off doesn't mean that the whole market is completely cooked. Futures just opened as I'm recording this video about an hour ago. So a little bit of a gap up, but not anything major. So I don't think this is indication that the whole market is definitely okay. I mean, we have this massive drop and then this tiny rebound, and then this gap up is nice, but it's pretty to be determined. I mean, we had this little gap up on last Sunday, and then Monday was a big sell-off. So pretty rough week. we'll see what happens, but wouldn't be surprised to get a chop for a month or two. No one knows what's going to happen with macro, but that's the backdrop that makes a life sciences company that moves 3% a day interesting. Not to say that there aren't other companies that I've mentioned that are interesting. Walmart is interesting. Recent earnings, but that's a different pattern. You're buying off of earnings that just happened. This one doesn't trade 24 hours, so we'll see what it does when it opens tomorrow. I'm just saying that some companies do open right now. Walmart does not, so I can't really tell you what it's going to do, but 105 is the level. So there are ideas that might be great buys off of earnings. But in terms of just where money is flowing, healthcare and healthcare tech, Danaher seems like a good spot to buy, a good company to buy. There are a lot of ETFs that are more specific, sort of genomics. I'm not going to get too deep into these. I more focused on, yeah, exactly. ETF flow data is noisy and very lumpy. So especially when some of these ETFs, I mean, we can look at this ARCG, this genomics ETF, but you have to be careful because a lot of these are kind of illiquid. I mean, it is moving up slightly in the past few days, but this entire ETF, HEAL, only trades like, what is this? This is some sort of joke. 30 times 10,000. I mean, yeah, this is an ETF, but this could just be some financial advisor set this up so that he could basically make it easier for clients to just invest it as ETF rather than giving them custodial rights to their banking login. So anyway, DHR looks good. The larger ETFs look good. XLV is the most important one for healthcare. So we can go into exactly what this company does, but if we're being honest, really we're just looking at the chart and saying they're in healthcare, they're in tech. So it's a forward-looking sector of tech. And this is a large company, 130 billion, that has been around and it's starting to shape up at a time when the market's shaping down. So that's the idea. If you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want one-on-one help on a Black Friday $19 deal, hit the first link in the description.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.